Hello guys! Ito na yung part 2 of inventory discussion. Meron tayong tinatawag na periodic inventory system and perpetual inventory system. Ano ang kaibahan nila? Sa periodic inventory system, it uses an occasional physical count to measure the level of inventory and the cost of goods sold. While sa perpetual inventory system, it keeps track of inventory balances continuously with updates made automatically whenever a product is received or sold. Sa periodic inventory system, hindi ginagamit yung inventory account every time na involve yung inventory. Ginagamit lang siya by the end of the reporting period. Dahil dito, kailangan pang mag-manual count by the end of reporting period para malaman kung ano yung value ng inventory by the end of accounting period. Sa perpetual naman, continuously ina-update yung inventory account every transaction. Kaya, real-time yung pag-access mo sa data kung ano na ba yung value and quantity ng inventory ng company. Saan ba madalas gamitin tong dalawa? Sa periodic is kapag usually small lang naman yung peso investment per quantity, while sa perpetual naman is pag yung items is relatively large peso investment, for example, jewelry or a car. Kasi syempre, need maging strict and part of internal control ng company. Kasi syempre, pag inantay mo pa yung physical count by the end of a reporting period, it's too late na pala to investigate yung mga shortage kung meron man. Lalo, malaki yung peso investment per quantity. Sa adjustments, need ito na i-record sa periodic inventory after the physical count of inventory. Sa perpetual naman, hindi naman talaga need ng adjustments kasi nga, real-time ang recording ng data pero need mag-adjust kapag may shortage. Ngayon, dahil sa advancement of technology and a lot of accounting systems na, mas madali na lang ang pag-record real-time ng mga inventory ins and outs. Kaya mas nagiging widespread ng paggamit ng perpetual inventory system rather than periodic inventory system. To discuss further, ganito kasi ang nangyayari sa periodic inventory system. Merong beginning inventory, nagdagdag ng purchases pero recorded as purchases. Then, nag-record ng purchase returns as a contra expense account, which is a deduction para malaman yung tigas or total goods available for sale. Then, through physical count pa malalaman yung ending inventory. Then, ang result na is kung magkano yung nabenta or kung magkano yung cost of goods sold. Yung inventory value sa ending inventory is determined by multiplying the quantity which was counted to the corresponding cost per unit. Note, no shrinkage calculation is possible because the accounting records contain no indication of how much inventory should be found in the physical count. Kasi nga, nakadepende lang tayo sa initial inventory tapos physical count. What if before the physical count may nagnakaw ng corned beef? Hindi natin malalaman unless, syempre, check din yung sales records or official receipts natin kung ilan na yung nabenta, but it takes time and effort to investigate. What if thousands of receipts yung na-issue for the year, right? Sa perpetual inventory system naman, mula sa beginning inventory, pag may purchases, debit agad sa inventory. Pag may purchase returns naman, credit to inventory, which again, total na sa total goods available for sale. Whenever there is a sale, nagre-record tayo each time ng cost of goods sold and credit agad sa inventory, meaning babawasan agad yung inventory. Again, as mentioned earlier, when there is difference between the perpetual inventory balance and the physical count, an entry is prepared for the adjustment, which is a debit to inventory shortage and credit to inventory. Ito, detailed example. Alice Gao purchased merchandise on account 250,000. Sa periodic, debit purchases, credit accounts payable kasi di pa bayad, 250K. Sa perpetual, debit merchandise inventory and credit accounts payable. Paid freight charge 10,000, periodic, debit freight in 10K and credit cash 10K. Sa perpetual, debit merchandise inventory 10K and credit cash 10K. Pangatlo, returned 30,000 worth of defective units to supplier Shenzhen. Periodic, debit accounts payable, 30K, bawas sa accounts payable ni Alice kasi na-return naman yung purchases. Credit purchase returns, 30,000. Sa Perpetual, debit accounts payable, 30K. And credit merchandise inventory, 30K. Kung mapapansin nyo, pag sa Perpetual, diretso agad sa merchandise inventory yung accounts, unlike sa periodic na panay nominal accounts like purchases, freight, and purchase returns. Again, ang ibig sabihin ng nominal account ay temporary accounts na kine-close by the end of the reporting period. Next, sold on credit, 300,000 to Reza Hantiveras at 30% gross profit. Sa periodic, debit AR kasi and credit, 300,000. Credit sales, 300,000. While sa Perpetual, debit AR, 300K. Credit sales, 300,000. Pero, kailangan din nating i-account yung kabawasan sa inventory. So, debit cost of goods sold, 210,000, which is 70% of the total sales. Credit merchandise inventory, 210,000. Ang gross profit kasi na inalis natin is 30% of total sales, which is 90,000. Next, Risa Hantiveras returned 15,000 sold to her. Debit sales return and allowances, which is a contra revenue account, 15K. Credit accounts receivable, kabawasan sa utang niya, 15K. Sa Perpetual, same sa initial journal entry, plus entry for merchandise inventory. Debit merchandise inventory. Nadagdagan ulit yung inventory ni Alice Gao, which is 10,500. Again, 70% lang siya ng sales. Credit cost of goods sold, babawasan natin yung mga pinagbentahan, 10,500. Alice Gao collected 90,000 sales while in Tarlac. Debit cash, 90K. Debit AR, 90K. Same entry for both systems kasi wala namang kinalaman yung inventory sa transaction na to. Next, conducted physical count and 35,000 worth of merchandise remains to be in the stock room. Dito na magre-record ngayon sa periodic ng value ni inventory. Debit merchandise inventory, 35K. Credit income summary, 35,000. Tapos, debit income summary, 20,000. Credit merchandise inventory beginning, 20,000. Bakit tayo may pahabol na entry for beginning inventory? Kasi ang talagang inventory ending is 35,000. So yung initial na 20,000 was already taken into account for the physical count. Thus, sa general ledger, 35,000 na lang talaga yung value ng ending inventory. Ang adjusting entry dito is only to reflect yung changes sa inventory. Kung tutusin, ganito talaga dapat siya para mas klaro. Alam naman natin ang purchase account is a nominal account. Ibig sabihin, nakuklose siya by the end of the reporting period against the income summary account. So ito, medyo complete. Debit inventory ending, 35K kasi nga kailangan nating i-record or i-set up yung ending inventory value for 35,000. Credit purchases, 220,000. Ito yung net of purchase returns. Kasi i-close natin or i-zero out natin yung value ng purchases kasi nga nominal account naman siya. Credit inventory beginning kasi tatanggalin na talaga natin yung initial beginning inventory. So sa T account, ganito yung inventory recording. Ang balancing figure is 205,000 which is the cost of goods sold estimate. Ngayon, yung cost of goods sold is a nominal account din na kailangang isara sa income summary. Ngayon, sa Perpetual Inventory System, kailangan nating ilatag yung mga transactions na nangyari. Beginning inventory, 20,000, plus purchases, 250,000, plus freight, 10,000, minus purchase return, 30,000, minus sale, 210,000, plus sales return, 10,500, equals ending inventory, 50,500. Pero kung i-compare natin siya sa physical count, 35,000 lang talaga yung tira sa stock natin. So, merong shrinkage or merong inventory shortage which is 15,500. So, kay Perpetual Inventory System, kailangan nating mag-entry ng debit inventory shortage, 15,500, and credit merchandise inventory, 15,500. Note na kapag normal naman yung shrinkage or normal talaga siyang nangyayari sa operations ng business, i-absorb siya ni cost of goods sold. Pero kapag abnormal or material yung nangyari, for example, yung inventory lost is around 100,000, which is super material sa company, tapos involved pa siya sa investigation, kunwari involved sa pagnanakaw, i-absorb siya as other expenses. Next, discounts. Meron tayong tinatawag na trade discounts and cash discounts. Anong kaibahan nila? Trade discounts from the list or catalog price in order to arrive at the invoice price, which is the amount actually charged to the buyer. Example, alam ko, mahilig kayo mag-Shopee. Yung trade discounts is kung ano yung nakikita nyong discounted price na ng price ng item. While yung cash discounts, these are deductions from the invoice price when payment is made within the discount period. Kunwari, if within 10 days binayaran na yung binili, makaka-avail ka ng 10% discount. Pag trade discount, hindi siya recorded sa books, and ang main purpose is to increase sales. Sa cash discounts naman, recorded siya as purchase discount ni buyer and sales discount ni seller. Purpose ng cash discounts is encourage prompt payment. Example, the list price of a merchandise purchase is 100,000, less 10% and 5% discount, with credit terms of 5% cash discount if paid within 10 days from invoice date, due after 45 days. Journal entries, debit purchases, 85,500, credit accounts payable, 85,500. How did we arrive to 85,500? 100,000 times 90% kasi may 10% discount, times 95% kasi may 5% additional trade discount. Next, if kunwari nag-pay tayo agad kinabukasan, kasi syempre good payer tayo. Sana all. Debit AP, 85,500 to zero out yung utang natin. Credit cash, 81,225, which is yung binayaran natin net of discounts. So, 85,500 times 95%, that is 81,225. Credit purchase discount of 4,275 computed as 85,500 times 5%. Pero kung binayaran natin siya lagpasan ng discount period, ang entry lang niya is simple lang, debit AP 85,500 and credit cash 85,500. Next, method of recording purchases. Gross method and net method. Gross method, purchases and accounts payable are recorded at gross amount of invoice. Net method, purchases and AP are recorded at net amount of invoice. Para mas malinaw, dito tayo sa example kanina. If gross method ang ginamit natin, same lang sa entry kanina yung entries natin upon purchase, debit purchases, credit AP for 85,500, which is yung gross amount ng merchandise. Again, if paid within and beyond the discount period, ganito pa rin yung entry, same sa kanina. Pero pag net method, ininet na agad natin yung recording ng cash discount sa una pa lang. So upon purchase of merchandise, i-account na agad natin yung neto ng discount. Debit purchases, 81,225, which is 85,500 times 95%. Credit AP, 81,225. Kung mapapansin nyo, wala na ding recording ng purchase discount dito. So if ever na we paid within the discount period, re-reverse lang din yung unang entry nung nag-purchase tayo ng merchandise. Pero what if beyond discount period na? Debit AP, 81,225, which was the net amount. Debit purchase discount clause, 4,275. And credit cash, yung buong supposed to be na gross amount kasi hindi na natin na-avail yung discount, 85,500. Ngayon, kunwari end of accounting period na tapos di pa tayo nagbabayad tapos nag-expire na yung discount period. Mag-record lang tayo ng debit purchase discount loss 4,275 and i-set up na natin yung additional payable so credit Accounts payable, 4,275. Para di kayo malito sa debit at credit, gumamit lang kayo ng T account. Kunwari sa last scenario, beginning balance using net method per purchases is 81,225. Dahil sa discount lost, merong additional 4,275, so by the end of the reporting period, ang total ng AP is 85,500. Once nag-pay na tayo kay supplier, ang i-credit mo dapat na payable is 85,500 and hindi 81,225. So, balik tayo sa definition ng dalawa. Theoretically, correct si net method kasi inventory is valued at cash price equivalent and si gross method naman violates matching principle. Ano ba yung matching principle? Yung matching principle kasi, related revenue and expenses should be recognized within the same period. So, dapat match-match lagi si revenue and expenses. So, vina-violate niya yung principle na to kasi kunwari bumili tayo ng 2 chocolate sa Shopee. 10 pesos yung cost ng isang chocolate, balit 20 pesos yung dalawa. Hindi pa natin bayad yung 20 pesos. Pero pag babayaran natin siya agad bukas, 9 pesos na lang yung value ng cost ng item or total of 18 pesos. Ngayon, nabenta ko kay Aling Nene yung isang chocolate sa halagang 20 pesos. Nag-record ako ngayon ng cost ko na 10 pesos. Kinabukasan, binayaran natin agad yung chocolate so meron na tayong purchase discount na 2 pesos. Then, nung nabenta ko yung second chocolate, since merong discount na 2 pesos, 8 pesos na lang yung cost ng second chocolate as opposed to the 10 pesos na cost ng unang chocolate. So, anong nangyari sa makatuwid? Yung unang sale natin, 10 yung cost, 10 din yung gross profit. Yung pangalawa naman, 8 pesos yung cost, naging 12 pesos yung gross profit. So, hindi nagmamatch yung actual expense and revenue. Isa pa, gross method does not allocate discounts taken between COGS and goods on hand. Kagaya nga nung sa chocolate, inabsorb ng second chocolate yung 2 pesos na buong discount instead na tig-piso sila ng discount. Pero dahil na rin mas convenient si gross method, in practice, most entities use this method. Yun lamang.